Good morning, and thanks so much for tuning into the trade setup. I'm Neeraj Shah, and the cues not the best really. Let's first take stock of the news roundup. So Joe Biden has said that the Putin threats are real and could spark nuclear Armageddon. Now, whether the nukes on Polish land and how does Russia react? It's all a pot boiler. Very difficult to even think of a day ahead, forget a week ahead. So just laying out the news as it is. Oil is poised for the biggest weekly rally since March on the OPEC Plus move. It settled even higher at 94 odd dollars to a barrel. Gold set for the largest weekly gain since March amidst mixed US data. And for all uh, tech aficionados, Google has unveiled new phones and watch that undercut Apple on price. Can it impact Apple sales? Remains to be seen. Nevertheless, the long and short of all the news flow that has happened is that the global markets are in a bit of a tizzy. US markets came off, the futures are a bit lower as well. So 30 odd points lower for the US for the US futures. And almost all of the key indices came off over 0.5% in the case of Dow and S&P, over 1%. VIX inched up. So CBOE VIX, as you can see, up 6.9%. Dollar index inched up. It may be showing down 0.06%, but from 111.7 to 112.12. So dollar index inched up as well. The 10-year yield at 3.82 is circa around those levels of 3.8. No major changes there. But the bad news is that dollar index and CBOE VIX have inched up. The good news is that India VIX is okay, and I'll come to that in a moment. First, there's GX Nifty, and that is showing about a 35 point down take, if I'm not wrong. Okay, 49 point down take as we speak, 17,267. Now, keep in mind, it's right there at the resistance levels, and that's the problem for the Nifty because yeah, okay. Now I'll come to trade setup in a moment. Just keep in mind that for the Nifty, uh, the maximum call concentration is at 17,500 and 17,400 levels. So we are right at those resistance levels. And an uptrend can be confirmed only if the markets were to eclipse 17,500 with conviction. Thus far, 17,400 a key resistance. And from the looks of it, from the start of it, it's very unlikely that this may really eclipse those levels today. So what's the trade setup? The underperformance by FMCG and pharma suggests a risk on mood, but global markets are soft ahead of the key US jobs data. And that's the point, viewers. I think ahead of that US jobs data today, it's very difficult to envisage that Europe or the Dow futures will have a meaningful uptick, and therefore the global mood will not support the Nifty. That's the point I'm trying to make. Um, Crude prices have edged higher, which is a net negative for India as we spoke. The small positive, like I said, is that India VIX has declined. Remember yesterday or day before I made this point that in the Twitter spaces as well, people said that India VIX should sustain below 20 for there to be a bit of a risk on sentiment developing. For now, it is that way. Don't quite know about what will happen end of day today, considering that US volatility also, or CBOE VIX has also inched up. So let's wait and watch what happens there. And by the way, it's all this talk of how mid caps and small caps are outperforming large caps. I looked at the 1 month and the 5-day returns. The 5-day Sensex is up 2.2%, mid cap is up 3.17. It's not a dramatic outperformance. Frankly, if you look at it on a 1 month basis, Sensex is down 1.37, BSE mid cap is down 1.53, small caps are down 0.69. So marginal at best. There is no dramatic deviation between the performance of Sensex versus mid cap versus small caps. On a daily basis, it does seem that mid caps and small caps on days of outperformance are doing much better. But in aggregate, the data doesn't quite show that. That's the pickle, really. Nevertheless, what are the stocks, therefore, to be monitored in the session today? That's a long list. And despite the markets looking wobbly, a bunch of stocks have the potential to have positive reaction. So first, metal names. Hindalco, Hindustan Copper, Vedanta, London Metal Exchange began a formal discussion on a potential ban on new Russian metal. And therefore, zinc, aluminium have risen as LMEs banned the new metal from Russian firms. So obviously, all of these base metal stocks would be in focus. Remember, metals was a good performer in trade yesterday. It'll be interesting to see if these stocks have some positives today. I don't know if they will or no, but the base commodities have risen. So very likely that some of these could have a reaction. So do watch out for that. Hero Corp going to launch Vida, its first electric scooter. It's been raised to a buy at Jefferies with a price target of 3,000 rupees. So it'll be interesting to see what happens here. Some quarterly updates. Dabur India consolidated revenue is expected to grow at mid-single digit. The international business expected to post double digits. So obviously the Indian business is the one which has grown at mid single digits or single digits or lower. Double-digit growth in the food and beverages, home and personal care portfolio will record about mid-single-digit growth, is what the company said. And the OPM is expected to be lower by about 150 to 200 basis points, in line with what Godrej Consumer Products also mentioned, that because of the high input costs, the operating profit margins are expected to be lower. The key viewers for FMCG, for IT, is not what they do in quarter two, but what they guide to in quarter three and quarter four. There's a question around IT. I'll come to that in a moment. But right now, Dabur India, the key around Dabur India or a Godrej Consumer or a Marico or an HUL is the commentary that they give of whether the cost pressures are behind them or whether it is difficult to say that. If indeed they say that this is the bottoming out of the margins, and if the RBI is right about the economy showing decent growth, then some of these FMCG names could actually be back in the hunt. So keep that in mind. By the way, speaking of companies back in the hunt, Titan is not seeing any kind of weak spots. Just look at the quarterly performance yet again, right? Healthy double-digit growth across most of the businesses, with overall sales growing 18%. That's strong, by the way. Jewelry division grew 18% on a high base in quarter two, and that's the telling statistic. Watches and wearable segment clocked in 20% growth YOY. Addition of 105 stores for the quarter ended September FY23. And keep in mind that arguably, because of Diwali being in the current quarter, which is quarter three, you'd probably expect some bit of strong sales for the bullion segment in quarter three as well. So Dashera, Diwali, both of them in quarter three in the month of October. So Titan will likely sound a positive note, even post a strong quarter two. Morgan Stanley came out with a note, an outperform rating, a target price of 2902. They say that the initial Q2 trends were strong with 18% YOY growth in the jewelry division. Eyewear grew about 7%, which is a bit of a bummer, but it's not a very large segment. But they're saying that the improving studded mix, positive consumer sentiment, and a good festive season outlook mean optimism for the business of Titan. So do watch out for that one. One more, by the way, one more quarterly update is Equitas Small Finance Bank. They clocked in 20% YOY growth in provisional gross advances to 22,800 crores. CASA ratio improved, cost of funds declined. Well, decent for Equitas Small Finance Bank. One which was also looking strong, I thought, was Phoenix Mills. I thought their numbers were, their quarterly update looked okay. So keep that stock in focus as well in the session today. Aside of Titan and Equitas Small Finance Bank, which have grown well, I think Phoenix Mills consumption growth was 18%, breaching the pre-COVID-19 levels on a like-for-like basis. So that's the good thing. Key block deal was RateGain Travel Technologies. Nippon India Mutual Fund acquired about 50 lakh shares in the company at an average price of 292 per share. There are a couple of brokerage notes. Morgan Stanley and Bharti Airtel overweight with the target price of 825. The official announcement of the launch of 5G Plus in select cities. I got an SMS as well yesterday, by the way, from Airtel. I'm an Airtel customer, and this should be interesting. So Morgan Stanley is an overweight on Bharti. And much as we think that telecom is not creating wealth, I stand corrected in a conversation that I had with somebody on Talking Point. Airtel for the last 3 months has been last 3 years has been a doubler, and which is not a bad thing at all. So Morgan Stanley is overweight on Airtel, and the stock recently hit new highs. Let's see if it does more. Jefferies has a call on Macrotech developers, a buy with the target price of 1420. It raised the FY23 pre-sales estimates by 5%. Remember, this is yesterday's news, by the way, and the stock did react on that. But now there's a Jefferies note wherein they've raised the earnings estimates, raised the pre-sales estimate, and all of that. And as a result of which, the target price is 1420, higher than the previous target price. So do watch out for Macrotech as well. In fact, do watch out for SBI cards. There is an MK note on SBI cards. From a trading perspective, they're saying that delivery percentages were higher. The close price was trading just above the 200-day moving average. The breakdown below these levels with significant volumes can give a short trade of 800 levels. RSI is near 40, which suggests weakness in the stock prices. Fundamentally, it may look okay because there are a couple of developments on SBI cards which could be positive. But MK says that technically or from a quant perspective, there is a bit of an issue there. So interesting out there. By the way, the other note that I've missed out is Mahindra and Mahindra, and Goldman has reinstated a buy on Mahindra and Mahindra with a target price of 1630. So do watch out for that one. And there's a viewer query of any direction on result expected from IT companies. Well, I would reckon we'll have a clutch of them, right, starting next week. So there is Infosys, there is TCS, there is, I think, HCL Tech, and a couple of others. So it'll be a very packed earnings season. Yeah, thanks Virat for pulling that up. As you can see on your screens, TCS 10th, Wipro and HCL Tech on 12th, Infosys on 13th, Cyient on 13th, Mindtree on 13th. I think it will be important, Naveen, to understand what their commentary is, to be very honest. As you can see, the last 3 or 4 sessions, there has been a bit of a pullback from those lower levels for the IT companies. Clearly, Persistent Systems, which was given a buy from JP Morgan, and Persistent Systems had taken part at the JP Morgan conference. So they would have sounded off some optimism, I reckon, as a result of which JP Morgan has had a buy on Persistent. It'll be very selective, I think. This time around, you'll probably see IT companies being very selective because in a quarter wherein margins might still remain under pressure, there are some companies which might actually do the opposite. So you've got to separate the wheat from the chaff. Even though the macro environment is challenging, there are some companies which are doing better than the others. And that's where the challenge lies for predicting for the space at large. It's nearly impossible to predict the space at large. Some companies have very divergent growth trajectories from the others, and therefore you've got to be careful if you are trying to paint the whole sector with the same brush. Let's not try and do that. Maybe hearing the commentaries would help. So I think this assumes a very important quarter because the demand commentary may fade, the margin commentary may improve, and for some companies it might be different from the others. So important to mind that. Couple of stocks to keep in mind. Praj Industries, very healthy buying happened in trade yesterday. The delivery volumes are much higher. Price activity also decent. Do watch out for Praj. Could be an interesting one for the next few sessions. So that's something that you keep an eye out for. And uh, for everybody who is a subscriber of BQ Prime, there is an event that we're coming out with as we wrap a trade setup. We'll show you. So, I mean, it'll be a demo of that event, and we'll of course keep on updating about that event. For anybody who's a subscriber of BQ Prime, you may log in to our website or our social media handles and try and register. It's limited seats, so first come, first serve. But it's an interesting event with a lot of very smart corporate conversations, which will give some idea about what the defense sector is doing or what mobility is doing or what power is doing. So if you are in Mumbai or if you can travel to Mumbai and if you are a subscriber and if you log in early and register early, you might get a chance to be there. Please understand, it's an in-person event, so can't have everybody out there. So which is I'm urging you, if you are a subscriber, please log in and try and register. It'll be great to see you at the event. Thanks so much for tuning in for the trade setup and have a great weekend.